all the developments in the payments, we are just going forward and moving forward to digital payment generally. Nowadays, you can issue only digital card. You don't need physical card. So you see, the QR codes are everywhere in different formats, in different forms. We have more and more data, and we have more services to build on data. Why PSD3 is on the horizon, and why it is that important on the EU agenda? What will be the interface of the future?
Today it's my pleasure to introduce Anna Maj, an exceptional innovation leader and senior strategic advisor. Anna is co-author of the PAYTECH book and the AI book and has been recognized as one of the top 10 FinTech Innovators and top 10 women in FinTech. Anna, thank you for joining us. Did I miss anything introducing you?
Thank you very much, Denis, and it's a pleasure to be here with you. Thank you for your invitation. I think it's a very comprehensive introduction, and thank you for your kind words.
Today we are going to talk about payments a lot, and I would like to start with digital and contactless payments. We can hardly imagine our lives without contactless payments anymore. It's not only credit cards that do not require physical reading of the device, but also payment through mobile devices and the use of QR codes. And by 2027, contactless payment transactions are projected to exceed $10 trillion and reach 8.3 billion transactions per year. So can we expect contactless payments to take a large part of the developed economies in the near future and the physical card to become almost as optional as cash?
Yeah, I think it's a very good question, Denis, and I also think that we should have a broader perspective. So with all the developments in the payments, we are just going forward and moving forward to digital payment, generally speaking. So cards also, they become more and more digital. And if you talk about contactless payments, you talk about the physical environment, so usually in-store payments. So there are like two different interfaces that you can use. This can be done with NFC technology, but also with QR codes. But you don't need this physical relation with the device, with the acceptance device like POS, point of sale terminal. But still, we are talking about physical environment. And of course, if we talk about digital payments, cards are becoming more and more digital, also in e-commerce, in online shopping, and in this environment, so which is very important to highlight here. So talking about contactless, there is a proliferation of contactless technologies. As I said, NFC, but also digital wallets are adding to this. Because if you can store your card thanks to the tokenization technology in your wallet, let's say global one like Apple or Google Pay, you can also use NFC and you can just initiate a transaction in this way. And in other parts of Europe and in other parts of the world, especially in Asia, QR codes are very popular. This is how you can also initiate the transaction. But it's important to understand that there are like two different environments. One is offline, so in-store, but you still don't need your physical cards to initiate the transaction. And the other one is online, e-commerce. So it's naturally, it's digital because you don't use physical cards. And on top of that, if you talk about trends and some further developments, nowadays you can issue only digital card. You don't need physical card. So not only to store in your wallet or within your wallet, but it can be purely digital. And thanks to tokenization, already with neobanks, with fintechs, but also incumbents are doing that as issuers, you can only have digital card. And this is also my experience as a user, because one of the banks issued me a digital card that I could use like straight away. I could pay in every location, and I didn't even have a physical representation of the card. So definitely this is the trend to go digital.
And to be honest, I forgot when the last time I took out a physical card from the wallet.
Absolutely. Even for the ATM withdrawal, you don't need physical card because you can still initiate it with other alternative methods. So basically, I also wear only just I have my mobile phone. I can have my card stored there, and I usually use the wallet. And of course, I don't need the physical card to tap and to interact with the POS device, even in store, not even mentioning the online environment. So for example, the e-commerce, but also in-app And in-app, this is very, very convenient. We talk about convenience and ease of use. So if you use Apple Wallet, Apple Pay, or Google Pay, and of course, any of the global wallets, but also local ones. So you basically don't need a physical card to execute and to make all these transactions.
Let me remind you, my name is Denis Astapchenia. I'm head of financial technologies at Andersen IT company. Our research and development department works on the content for this channel and also collects the best practices of fintech software development. You can view the examples of such case studies on our website. The link is in the video description. If you need to go digital, cut operational costs, or automate business processes, we will offer the best possible solution for a business case. Contact us. What are the incentives for merchants to provide digital and card payments?
That's a very good question. But of course, merchants and other players, they basically go with the trends. And with the rise of digital payments, they also have to follow this path. But there are some drivers standing behind the digital payments development. First of all, there are customer behavior. And there is a shift in customer behavior. So if you look at the customer's preferences and needs, merchants should really respond to these needs and preferences. So if they really want, the consumers, they want to pay online. They want to use alternative payment methods, such as digital wallets or mobile wallets. Merchants should be ready to accept these payments. And it's very important for merchants to have a broad range, a broad portfolio of different payment methods. This is what we call payment mix. And payment mix is important because you have different customers, different geographies, different goods and services, different categories, different devices. So that's why the payments should be also aligned with all these criteria. And having said that, if merchants follow the consumer preferences or needs, they can really respond to that dynamically. So this is a very important driver standing behind the merchant's choices, why some of the methods are needed. And again, if you look at the preferred method, there is a survey by A2A. So it's been like 2 or 3 years ago in the market. And it's known that the top 3 preferred payment methods, they can really just translate into the higher conversion rate. So even up to 30%. So this is very important for merchants. What merchants want to achieve, they want to have a higher conversion rate, especially in the e-commerce online environment. So it means when customer comes to the website, basically the customer doesn't abandon the cart. So it goes straight to the checkout and buys goods and services and of course pays for it. So this is the conversion rate that should be achieved, and merchants really push for a higher conversion rate and of course for loyalty and for customer stickiness and increased sales. But conversion rate is one of the most important factors. And of course, merchants look at customer behavior. They also follow the technology trends. So if there are digital payments and alternative payments in the market, they should also just apply them and they should introduce and implement them in the shops. And there is also regulatory framework that is one of the drivers for digital payments and for payments in general. So if we sum it up, that the push for digital payments is customer behavior, which is changing, the technology, which is available right now, and it's more seamless, it's more frictionless, and also the regulatory changes in the payments world.
And according to Juniper research, it is predicted that by 2027, 99% of all cell phones will support NFC payments, making contactless payments even more accessible to the average user. So do you think this circumstance will force merchants to take more aggressive steps to equip appropriate terminals and contactless point-of-sale systems?
Again, NFC is very important for in-store, so for the physical environment. When we talk about the technical infrastructure, and we have to have some type of physical device there. And of course, it's also changing because apart from POS that needs to be equipped with NFC technology, and this is the case in Europe, we have more and more NFC ready or NFC enabled terminals. And we have in certain geographies, we have even 100% of coverage. But of course, if you look at other geographies, some emerging markets, this is not the case. We still need to have more NFC-enabled devices. But having said that, it's not only about NFC-enabled POS, because POS is also changing and transforming into a more smart POS. We don't even call it POS, a point of sale anymore. We call it point of interaction, because you can do different, you can execute different scenarios there, not only making transactions, but having some value-added services like credit or loyalty points, and pay your bills. So there is a lot of interactions happening there. But again, we have different types of devices, and even there is a famous saying that software, it's hardware. So basically, we have more and more of software-based solutions. So for example, SoftPOS, which is an application, and it can be on the mobile device or any other portable device, and merchants can also accept payments by using the mobile app, so the SoftPOS, or any other mobile POS. So it doesn't have to be a standard POS terminal. And terminals are also just becoming more and more digital by the open infrastructure, and of course, especially by the open operating systems like Android. And they are already Android-based POS in the market, which enable for more applications to be there. And of course, to open up the entire ecosystem for more services to be added for customers. So definitely there will be more NFC devices, because even if you use the mobile phone and you use mobile phone as a POS, like a SoftPOS, so it can be NFC enabled. So we have like more enabled smartphones in the market. But of course, there are also some other solutions, so alternatives to hardware to execute and to accept payments.
And at the very beginning, where we were speaking about the trends, you already mentioned QR codes. And actually, they are the leader among contactless payments, according to the growth rate of 400% in 2022. And now QR codes can be seen in public transport, in restaurant menus, when selling tickets to concerts and other events. So what is the reason for this type of payments popularity lately? And is it really so convenient, or its predicted total growth to $3 trillion by 2026 is mainly due to the spread of this technology in developing countries? What do you think?
It's a very good point, because it's mainly about developing countries, but not only. And we mentioned how important is ease of use or convenience for both merchants, but mainly for consumers. And especially in payments, ease of use, so the seamless, frictionless customer experience is a key. And it's instrumental to make any payments, any transactions. So if something is easy to use and doesn't really require an additional infrastructure, this is something that can really be developed and can be easily adopted by masses. And we can face a mass adoption or a mass uptake in developing geographies. So just looking at QR codes, and of course, especially in Asia. So if you go to any very small shop and small outlet, so you have QR codes everywhere. They are literally everywhere. You can scan them and you can initiate the payments. And most of the mobile wallets, digital wallets in these parts of the world, they are based on QR codes. And we can really see people like, just tapping, scanning QR codes, because it's easy to use. And I also said that it doesn't require an additional device or additional infrastructure, because NFC, of course, it requires NFC-enabled mobile phone, smartphone, and any other device. For QR code, you only need camera, and you can easily scan the QR code and initiate the payment. So that's why they are very popular in Asia or in some parts of Africa. But it's also something, but if you look at the broader picture, how many people have smartphones, and how many people have also phones equipped with camera. So for example, if you look at India, there is a Google Pay. And what Google Pay made in India, they came up with a solution which is called audio QR codes. Because some people, they still can't scan like images, so they can't scan visual QR codes. So they have audio, and of course, audio can be easily adopted by every mobile phone. And there's a proliferation of audio QR codes there. So you see, the QR codes are everywhere in different formats, in different forms. And also one of the phenomena that you can meet or you can see in Asian countries is because we are struggling with interoperability. If we have a mobile or digital wallet, we want to pay in other countries, not only in Vietnam or not only in the Philippines, for example. And of course, QR codes are very user-friendly, or they are very friendly to achieve, and they are also very helpful to achieve this kind of interoperability. And there is a payment scheme in Southeast Asia, which is making this happen and possible, so achieving interoperability for cross-border payments. So if you have your mobile wallet, you can also go and pay in other countries with use of QR codes.
Nowadays, cashless payments with payment cards are a top priority for businesses, and at the same time, the number of commercial transactions involving cash is steadily decreasing. However, the use of payment cards by customers has an impact on merchants' costs, and costs such as interchange fees are included in the cost of the services or goods paid with payment cards. How will the existing interchange fee distribution scheme transform over the next 3 to 5 years?
Okay, so first you have to understand how the value chain in payments work, and of course, what is the transaction fee? So interchange fee, which is paid back to the issuers of a payment instrument, so for the issuing bank, for example. But of course, nowadays, more and more different players are issuing cards, even digital cards only, so like fintechs or neobanks. So they are also like issuers of this payment instrument. But having said that, interchange fee is a fee paid back to the issuer, and it's a very important component of the transaction fee. But it's not the only one. So this is something that is paid by the merchant as a transaction fee, so interchange fee, but there is also like processing fee and related fees, which is dependent on the volume and is paid to the payment scheme, such as the biggest one, Visa, MasterCard, and so on. And of course, there is also an additional margin that is being paid to the acquirer, to the PSP. So to the player, to the somebody who is basically processing the transaction. So there are different components in this value chain. And of course, this fee is being paid by the merchant. So that's why the cost of the card payment is something which is incurred by the merchant. And alternative payments can be, of course, more economically valid for or viable for merchants. Because first of all, either the interchange fee is lower, for example, for some of the mobile payments, for mobile schemes, for mobile wallet, or there is no interchange fee if you look at account-to-account payments, for example. So of course, the transaction fee can be lower, and that's why it's more attractive and more economically available to the merchant. So that's why this is also changing. And I still remember the times in Europe when the interchange fees were really high, more than 1.5%. And then due to some regulatory changes and due to some regulatory push, of course, they were decreasing, and they were decreased based on the legislative actions and measures. And of course, in Europe, we have very preferable interchange fee, so also the transaction fees are lower. But you have to remember that in some other parts of the world, this is not the case. For example, in the US or even in the Middle East, so the transaction fees and interchange fee, of course, is higher. And interchange fee is also related to the type of the card, if it's credit or debit, or also if it's e-commerce transactions and MCC, so the category code of merchants. So there are different criteria that can really influence the amount of the interchange fee and also associated related fees.
So, as I understand, in Europe, the fees are lower and they are regulatory driven. And in the US, they are higher and mostly market driven. So what approach is more reasonable, and how the fees will evolve in the future?
Yes, of course, there is a certain limit that can be that is achieved. So, of course, they can be lower than something. And of course, now we have in Europe very low interchange fees. And as you said correctly, there are two forces driving this. So either this is regulatory changes or regulatory push, which is still initiated by the market players, especially acquirers or PSPs and merchants, first of all. And there are also market-driven initiatives. But payment fees and especially interchange fees, they are very much dependent on the payment schemes. So big organizations globally, and also banks. So I would rather see this from the perspective of alternative payments. Because if we talk about any payment-related fees or even interchange fees, because there is an interchange fee for any issuing payment scheme, for example, mobile wallets as well. But if we look from this perspective and we have a broader perspective, then it's about alternative payments that can really change this market. Because for alternative payments, as I said, the interchange fee or the transaction fee can be lower because you don't have all these components related to cards. You don't have all these costs, of course. Cards are also related to security and you have to pay for this security. And if you have the example of account-to-account payments, so bank transfers, there's hardly any fee. Of course, there is interbank fee related to payments and to money transfers, but there is no interchange fee because it's a different animal, it's a different environment. So I would rather look from the perspective of alternative payments, how alternative payments, and by that I mean alternative to cards, can really change this payments landscape, especially in terms of the related fees.
What should small, medium, and large companies be guided by when choosing between different payment gateways and payment processes? Which of the existing systems do you think has a competitive advantage in terms of better security, speed of payment processing, ease of use, and fees?
Yeah, thank you for this question, Denis. And it's very important. You mentioned some of the criteria that are instrumental to choose to select the payment provider. And also you mentioned different players because the payment world is very complex and we have an entire value chain and we have different roles in this value chain. So there are acquirers, there are PSPs, but they are, of course, also payment gateways for e-commerce. And first of all, we should look at the environment, if it's physical only, if it's e-commerce, or it's both. And usually nowadays, this is overlapping. So we have both digital and physical. Sometimes we even call it phygital. So we have in-store and e-commerce activities. Of course, there are some merchants who are online, purely online, so online only or digital only. They can still have an app. So it's very important what kind of environment you are operating in, because for online you will need a broader payment mix and a lot of different payment methods will be represented. So you need a payment gateway provider or you need a PSP. There are also payment orchestration companies who can easily route you to different payment methods. But first of all, if it's something that I mentioned already, how you answer, how you respond to the consumer needs. So what is your preferred payment mix and what payments method should be represented? So if you look at the payment provider, of course, payment provider should be able to really just close this gap and basically answer your need in terms of the payment mix. Fees are very important, and this is economic model, revenue model that you should have in your mind, the business case. So fees are important, but we already talked about that. And another important criterion is ease of use and convenience, but also security, because you can't compromise on security. So if there are players in the market who can really provide an end-to-end payment technology stack, so you should look at these providers and have really a scale and who represent a lot of different payment methods, and they can also provide this in a secure manner. This is a key factor for selecting payment providers. Last but not least, what I would highlight here is value-added services. Because as you know, we are more and more into payment-related services and in so-called embedded payments or embedded finance. So there is not only payments as transactions, but we have more and more data, and we have more services to build on data. So data analytics is also important for merchants. So especially for the big ones. So if you are a large account, large merchant, you should look into somebody who can really just provide you with data analytics, with comprehensive view of your customer behavior, because it's very important to make some informed decisions. And talking about data, it's also important to underline how we can really build more services based on that. So value-added services, for example, BNPL, which is also a payment method, so buy now, pay later, or any other credit facility, or some loyalty schemes, because it's not only about payments nowadays, it's about an entire portfolio of value-added services and also data analytics on top of that, because you have to understand behavior of your customers and you have to make some decisions based on that. And there are more and more providers who are dealing with this kind of data analytics based on cards and based on other payments methods. And you can also think in terms of the smart checkout. So you can personalize or customize the checkout. So you can select the preferred payment methods. So there is a lot of analytics that can be achieved. And merchants are more and more savvy and they are more and more aware of these needs. So it's not only about payments. Also the settlement, reconciliation, reporting. So all payment-related services are very important, especially for big merchants. So it's not only about the payments and the fees, who is cheaper, who is more expensive, but it's very important to have in mind the security aspect and then the value-added services aspects, especially based on data and based on data analytics that can be provided.
And finishing this chapter, I would like to mention technology such as credit card tokenization, which is used today by many credit card issuers such as Visa or MasterCard, and is also present in mobile wallets such as Apple Pay or Google Pay. It reduces interchange fees mainly by improving payment security. So how all this evolving today, and how could you compare it with EMV technology?
Yeah, again, if we look at the payments world, of course, it's evolving and it has been transforming. I still remember, believe or not, the times of imprinters, so-called devices that for embossed cards, you could use these cards in the imprinter, and this was the vehicle to pay. But of course, it's not digital, it's analog, it's outdated. But I still remember these times because I started in payments more than 20 years ago. But then, of course, we have the magnetic stripe technology, and probably in some cases, you can still very rare, you can still need signatures. So magnetic stripe was combined with a signature. And of course, it wasn't very secure because magnetic stripe could be replicated and of course, signature. And then we had the EMV and of course, the standard proposed by the big payment schemes, MasterCard and Visa. So EMV, this is again the combination of chip and pin. So then we remember, of course, and we still have the cards, physical cards equipped with the chip technology when there is a microprocessor or a chip embedded in the card. And then you need the PIN to authorize the transaction. And sometimes we still need it, especially if you use the physical card. But then we become more and more digital and seamless and frictionless. We mentioned contactless, so NFC. For NFC, of course, you can authorize this with biometrics, for example. And of course, you don't need any PIN if that there is a certain amount of transaction and the value of transaction dependent on the country and so on. But of course, otherwise, there is still PIN needed. But if it's contactless, and especially if it's in your wallet, and I will come back to this, you don't need any PIN. But contactless is easy because you can only tap and you can tap and pay literally. And then the stage of tokenization, I think it's a powerful technology and I really like tokens and tokenization because what is it about? So basically there is a token that make your card secure because instead of storing your card number, so this is translated into or transferred into the token. And of course, we used to have encryption and encrypted card numbers, but now it's tokenized. So instead of sharing or storing the card number, you have the token. And of course, there is like individual token. So that's why the merchant knows who is the owner of the card and so on. So there are all the data stored in this token, but why is it secure? Because you don't have access to other credentials of the card, especially the card number. So especially in the in the online environment, this is not only ease of use, but also security enhanced, but it's very needed also in the physical environment. And here we arrive at mobile wallets or digital wallets, like global ones like Apple Pay, but also other, when you can store your card, exactly thanks to card tokenization. And this is in your wallet. And then if you pay, basically you can authorize the transactions with some biometrics. It used to be the Touch ID. Now it's Face ID. So it's face recognition. But anyways, talking about tokenization, merchants, they receive the data, but just once the card is, for example, renewed, so we have a card renewal or it's replaced, they don't need to change this data and they don't need to make it new. So basically, this is very seamless for merchants as well, because they receive through the tokenization, they receive all these details and there is no need for any updates on the merchant side. So this is, first of all, ease of use for both merchants and consumers, but it's also more secure. So that's why I really think that tokenized cards will have more adoption, and they have more adoption across the world. And of course, that's why we can only have like digital only cards, and we don't really need the physical representation or physical cards.
Anna, you already touched BNPL as a payment method, so I want to dive a bit deeper into it. The main users of BNPL services are mostly young people of Generation Z or millennials, and many of them use such services on a regular basis. So how can you explain this generational difference in the use of technology? And is it usual conservatism of older generations and the tendency of younger ones to support innovation, or are there other factors influencing user preferences?
Yes, again, this is about customer behavior and changing behavior patterns, but also preferences and needs. And if we look at the younger generation, and indeed there are some surveys showing that BNPL is mostly used by younger generation, but not that young as we can think. But still, these younger generations, they are more technologically savvy and financially savvy, generally speaking. So there might be a reason for that. And what they really look for is they want to have transparent services. So BNPL is very transparent, because if you look at the fees the consumer paid, there is a zero interest rate, so like zero APR for the credit to be used. And this is very transparent. Of course, if you use it on a certain rules, and if you don't prolong the credit, so overuse it. So either if you pay in 30 days or if you pay in the installments agreed, so then there is a zero cost for you as a consumer. So it's very transparent. But another reason is they really want to have flexible payment methods. They want to have flexibility. And that's why BNPL, buy now, pay later, which is still considered a payment method, is something that really make it possible for them and just provide this kind of flexibility, because they can pay either in installments or they can pay like 30 days later. And of course, they have they buy now and they will have the goods provided instantly in a way. There are, of course, different BNPL models, and there are different installment schemes, or you can pay upfront certain part and then it can be prolonged, so it can be a deferred credit that you will use. So, of course, it very much depends, but I think generally speaking, this is about transparency and flexibility.
How to explain the popularity of BNPL in such countries as Sweden and Germany, where it accounts for 1/5 of all electronic payments? What is behind the Australian phenomenon, and opposite, why Poland, for instance, occupies only the 17th place in the ranking with a modest market share of 2%.
I think there are different reasons for that. First of all, we said that BNPL is a payment method. Of course, if you are at the checkout, BNPL is listed there as a payment method. This is like an instant crediting. You have instant payments. We talked about instant payments. So BNPL is like an instant crediting. But I use the word crediting, credit. So it seems for many users or to many users that it's a payment method. But in reality, and of course, talking about financial terms, this is a credit facility. And not many users are aware of that. Some of them are aware. So that might be a reason, because this is a credit to be used. So of course, I have my purchase deferred, or I pay in installments, and there is a zero interest rate for me as a consumer. But of course, there is still credit involved. It can be related to your credit card. It can be related to your banking account. Very much, again, depends on the BNPL model. But this is a credit facility, and not everybody will be willing to use a credit facility, although it's very, I think, in a way, it's a very good user experience to buy something now and pay later, especially when there is no fee, no cost related to that, and especially for certain amounts, because it's not being used for like small value shopping. It's rather for like higher value, dependent again, country by country, but it's something more luxurious to be like sunglasses or a piece of cloth or maybe some electronic device. So something that can be really worth of paying in installments. But I think if we heard the word credit, that might be something related to it. And also this is again about customer behavior and availability of this kind of payment methods. Because if you look at the biggest players and Klarna, for example, this is the Nordic ecosystem. And of course, they are also operating in other countries. For example, in Germany, when they have banking license. So they don't only provide BNPL, they provide some other services, including banking app and bank account. They are also active in the US, which is a very lucrative and attractive market for BNPL. And of course, a lot of US citizens and consumers there, they are using credit facilities in different ways. They are very much used to credit cards, for example. And Australia, if you look at some of the providers, so again, Zip, this is the company that originated from Australia. So I think, like, again, if you look at the evolution of BNPL, there are some providers from certain geographies that really just educated the market and introduced the BNPL facilities and methods very early, and consumers could really use this kind of payment. And of course, there are different behaviors, and differences in behaviors, geography by geography. So there might be some of the reasons for that.
Anna, you have mentioned Swedish fintech company Klarna is one of the leaders in the BNPL market with almost 150 million active users. So in your opinion, what is the reason for its leadership, and should we expect significant growth of the other players? Because, for example, in the United States, PayPal Credit takes the first position with indicators 4 times higher than Klarna.
Klarna is a very good example because they started very early. And of course, they evolved through all these years, and they acquired some of the companies, not only in BNPL. So of course, there is an entire pathway they went through, and this is how they developed. And why they're that successful? Because they are, of course, one of the largest, if not the largest company, and for sure they are very highly valued with some changes recently. But generally speaking, this is for the fintech founding and investment market in general. So Klarna, they are, as I said, they don't only provide BNPL, they have like end-to-end portfolio and value chain of different payments and financial services. They have loyalty scheme. I mentioned the banking app in Germany. So they are into different financial services. So this is how they can really make the users loyal. They can educate the market, but they can also stimulate the market and basically encourage users to use other services. So they really close the gap in the value chain in payments, and they have different and the diversify range of different payment and financial services. So end-to-end model. And I think this is very important. Then the second reasons for them to be successful is the business model. They have a big scale and massive volumes of transactions. They have a lot of consumers and consumer transactions, but they also have a very solid merchant base, which is more than 200,000 merchants. So it's huge. And they have been building that for years. And what they did, this is again about the business and revenue model. Usually, startups try to build a customer base phase and to reach to thousands or million if they are consumers, to million of consumers, and they try to introduce any fee and to make it successful and reliable in terms of financial model. But what Klarna did from the early days was that they not only build a merchant base, they introduce the fees and they make it profitable very quickly in terms of just introducing some of the fees for merchants. So this was like a parallel process, very successful. So they really scale up, but they also were successful in terms of the business models and making revenue because they were generating revenue from the merchant base. Because what is very important to remember here, I mentioned that BNPL is free of charge for consumers. There is no interest fee or APR, so there is literally zero. Of course, there can be some hidden, not hidden, but of course, if you don't stick to the rules, you have to pay for that if you extend the credit and so on. But there is a transparency, as I said, no hidden charges, no hidden fees. But somebody has to pay for it because this is a credit facility and somebody makes available credit for you. So there is a liability. And of course, merchants are paying for that. So there is a fee for merchants. So if we talk about the BNPL, of course, there is dependent on the market, dependent on the provider, from 2 up to 6%. Of course, there can be 4 or 5%, let's say, transaction fee, dependent on the model. But there is a fee that is being paid by the merchant. And Klarna made it very clear from the very first days. And of course, they charge the fee from the merchants, although there are different models as well for BNPL. And last but not least, something that I highlighted, this is the scale they are operating. They have thousands, hundreds of merchants, and they also have the volumes. They also acquire the biggest merchants, the largest merchants globally or internationally. Let's take an example of ASOS, e-commerce leader, and also Sephora. So some really big, large accounts they can serve. And they expanded. So they expanded out of Sweden. They are in Germany, in Poland, in many different European geographies, but they are also in the US. And they are really just very competitive there. And they put a lot of efforts to establish their position in the very competitive, but very lucrative US market. And I think this is one of the BNP markets to be, because it's very competitive, but it's also very lucrative. So that's why there are also other players. And you mentioned PayPal. Just generally speaking, BNPL market is, on one hand, it's very fragmented because there are a lot of players, especially new players like fintechs, newcomers. Let's mention some of the geographies. Every country has some local domestic players. We have Twister, we have Klarna, but we have Zilt, for example. But we also have some fintechs which are really big, like Affirm or Afterpay. In the Middle East, yes, Taba, Tamara, Postpay, Spotty that was acquired by Zip. So we have really just a lot of players. So on one hand, it's fragmented. But because it's fragmented, we also see a wave of consolidation. So Zip acquired some of the player, PayPal acquired. So this is a wave of consolidation. I think we'll be also seeing more of this of the market to consolidate for BNPL. But on top of these new players, fintechs, because it's a kind of attractive market, and of course, traditionally, historically, credit is the domain of banks, we also see some of the incumbents to also trying to tap on this opportunity or to grab this opportunity. And we see some incumbent banks really interested in BNPL, in introducing this kind of BNPL. We also see big tech. And you mentioned PayPal, but Apple is also in this market. And they also partner, they cooperate with AFAM. They acquired also Credit Kudos for credit scoring. So we see a lot of these examples. So it's not only about new players or niche players or local players. It's about big tech. It's about incumbents. And Apple, we mentioned Apple Pay. And of course, Apple is really just paving the way towards fintech and financial services. And we have the Apple Pay. We can pay with the wallet. And we also have Apple Credit on the horizon. And it's already available in some of the selected geographies. And Apple will definitely use our data as well to make a credit scoring and so on. So this is a very interesting area to be. And I think a lot of emerging new models will be there very soon.
So let's move to another topic and talk about account-to-account payments, open banking, and PSD initiative. And I want to start with two questions. So what's going on in account-to-account payments world? And what do you think about instant payments, such as the popular Blik in Poland? As I see they have a lot of advantages: speed of operations on the client and bank side, instant response almost 24/7, reservation of funds on the debit side of the account for subsequent banking operations, and possibility to cancel the operation and a high degree of security. So is it the future of payments?
Of course, account-to-account payments are example of alternative payments, alternative to cards. And absolutely, this is the way to go. There will be more alternative payments. Even if you look at the mobile wallet, we have card-based wallets, but we also have account-based wallets. So some of the mobile wallets, they are account-based and they are linked to the account, not to the card. And why they can really just gain on popularity or the proliferation can be higher. Because it's easy to use, that's true. But also the security is enhanced. Of course, we can talk about instant payments, but not only about instant payments, which is even more important for merchants. This is instant settlement, because this is account to account. So in some cases, merchant can receive the money even online. So like a real time, really. So that's why it's instant. But even with the current settlement, it can be the same day or D+1, which is not the case still. It is not the case for card payments because it requires a different settlement cycle. So sometimes it's D+3 and so on. So of course, merchants can, for cards, they can receive the payments and the funds delayed. I mean, not delayed, but of course not instantly. So this is again the advantage of account-to-account payment. But if we look at the payment landscape and let's say it worldwide, it's different in different parts of the world. And I think we should also understand it because we are still dominated by card in most parts of Europe, especially for physical transactions. So cards are everywhere. In online environment, it's slightly different, but still in some geographies like UK, Germany, and generally speaking, Western Europe, cards are really prevalent. And but it's not the case in Asia. So digital wallets and also account-to-account payments are really dominating this market. So cards are decreasing there, and they are not majority. So it's important to acknowledge this one. But also, if we look historically at different geographies in Europe, now we say that with open banking we have this kind of revolution because we entered A2A, so account-to-account payments or transactions. But if you look at some other countries, even in Poland, we had pay by link in the e-commerce environment. So we used this even before open banking rise. And of course, it was different because still you have to log into your bank and give your credentials. It was secure, of course, but then it took even longer and the more time was needed to execute the transaction, but still the logics was the same. So if you look at different geographies, it's different because now in the UK, of course, there is like more and more account-to-account transactions that they are a kind of a competition for card-based. And of course, they are cheaper. They are cheaper because there is no interchange fee. So they are, of course, cheaper for merchants, and merchants are really willing to adopt and, of course, to introduce this kind of payments in their shops or in their outlets. But it's different in different parts of the world, even in Europe. When for us, account-to-account payments, it's not a revolution, it's an evolution. So now it can be even more instant. But the users in Poland and also in some other geographies in Scandinavia, in the Nordics, with mobile wallets, they already use it before PSD2 or before open banking.
You touched the PSD2, which sets standards and rules for open banking and appeared 16 years ago, but only received its first update 9 years later. And it took another 2 years to adapt it to the legislation of EU member states. And now experts are increasingly predicting the emergence of PSD3, while the first transitional European countries should have taken as much as 6 years since its announcement. According to your predictions, when should we expect the adoption of this new directive, and what mistakes should we avoid when implementing PSD3 based on the previous experience?
Thank you, Denis. It's another very comprehensive and broad question, but very good one. And of course, I still remember the times of the consultation stage for the first PSD, so Payment Services Directive legislative framework. And I think it's very important also to have this kind of a throwback and to look at the evolution of PSD, so Payment Services Directive. Because the first one that was introduced in the EU was about like non-financial players to be able to provide some of the financial services. And it was a kind of a breakthrough because before that, only financial players such as banks, but also payments providers were able to provide financial or payment services. And with PSD, it was a kind of a disruptive situation in the market because non-financial players such as retailers, even merchants, e-commerce platforms or telcos were able to provide financial services such as payments. And of course, the other question, and the question still remains, if they really just commercialize it, if they benefit from it at that stage, but it's another question. But it was really revolutionary to look at this, how the market opened up towards non-financial players. And there were first like FinTechs and also non-financial players to apply for the payment license, because of course it has to be licensed and regulated and supervised by the respective regulatory body. But anyways, the market has been opened up towards non-financial player, and it was the first milestone. Then if you look at the PSD2, what happened? We had these non-financial players like TPPs, third-party providers, but they were granted access to banking data. And I think that's another milestone and a revolutionary approach because banks, they were in a way obliged to open up their banking data, of course, in a very limited scope to bank account information and to payment initiation, so only in these two domains. But still, this is a very breakthrough situation when the non-financial players like TPPs, like all these newcomers, new entrants, can have access under certain rules to the banking information. And they can use this information to create new services and to provide these services to consumers. So why all this happened? Because there was a regulatory push towards making the payments market more competitive. So to allow other players to enter this, not only incumbent banks traditionally, and also to make it more transparent, because if there is more competition, the market can be more transparent, and to make it more innovative. If there is more competition and if there are new players in the market, they can provide new services based on that. So first with PSD2, we open up the market towards new players, non-financial ones. Then with PSD2, and of course, this is all in a nutshell, but just to have this kind of a background view, with the PSD2, the non-financial players or new players, they were granted access to banking information, bank account information, and banking data. And this is very important. And now we are facing the situation when PSD3 is on the horizon. And a couple of weeks ago, like 3 or 4 weeks ago, the European Commission announced the legislative package for PSD3 and also some related directives and related acts. But why PSD3 is on the horizon and why it is that important on the EU agenda? Because we have access to banking data and we have access to data, and now we look from the perspective of data-driven ecosystems. So financial data is not only about banking data, it's more than that. So on one hand, we will face the situation when these third-party providers, they won't be anymore only like AISPs, so account information service providers, or PISPs, payment initiation service providers. They can also have access to other types of data because we have not only payment or banking standard, like, just checking accounts, but we also have credit cards accounts or debit card accounts. We have definitely cards. We have different types of credit facilities, even overdraft, but more complicated, like personal loans. We have different types of loans. We have even mortgages, and we have investments. We have insurance. We have like entire range of different financial services. If you look at the UK market, which is now separated from the EU legislative landscape or regulatory landscape, so PSD3 is in the consultation stage there. And of course, other types of financial services are considered and access to other type of financial data. So with PSD3, that's the first thing. So we don't only touch upon the banking account data, we also think in terms of a broader perspective of financial data. And with that comes data protection, because this is still about the data, but how we can make this process secure for consumers, for end users. And for open banking, this is a consent-based model. So consumer, if they want to interact with TPP, with third-party providers, they have to consent. Nobody can get access or gain access to financial data without a consumer consent. And again, this is instrumental. So with that consent going forward, we have more and more challenges, because if we have a broader scope of financial data, and of course, if this entire environment and ecosystem, data sharing ecosystem is becoming more complex, we have more issues to protect and related to data, but also to fraud. So with all this legislative coming forward, like PSD3, but also PSR, Payment Services Regulation, we have also Financial Data Access Act. And this is also the key, because customer should be given more protection and they should have more awareness about the transparent fees, about the fraud issues, how to store the data. So all this should be tackled with the new legislative. And it really just comes with a lot of challenges for the players in the ecosystem, because we'll be having data users and we'll be having data holders and the interactions between them. So how to exchange, how to store data, what are the standards? And standards should be also tackled. And what are the protection standards in this data sharing ecosystem? And I think it's very important how to approach this PSD3. So this is very intensive data sharing and data intensive ecosystem. And this issues related to security of data, to security of payments, as said, including fraud, because we have also issues related to that, should be tackled. And last but not least, we had some challenges considering the ecosystem and new players. So the new legislative framework is also paving the way towards making this ecosystem more streamlined and facilitate the access for the new players. So making it even more competitive and given the fast track and less hassle. So making it more streamlined and more friendly for new players to us incumbents. Again, just to make the entire ecosystem more competitive. So there is a lot of issues that should be tackled. And we are looking forward to this PSD3 and related directives and acts, so the entire package on the horizon.
Thank you for this deep dive. I also kept in mind that it will for sure make the whole landscape more innovative and competitive, as you mentioned.
But of course, it comes with the risks and challenges that should be also considered and tackled, especially with all the risks and challenges related to data security, data sharing, and data protection, looking from the consumer perspective, but also from the data holders and data users, because third parties, they can use the data in order to create the services. So that's why I have data holders, but we also have data users, like data producers and data consumers in this data sharing ecosystem.
Card issuing API stands as an effective solution for customer interaction and sales tool for businesses. And by issuing their own physical or virtual cards supported by an advanced API, merchants can provide in-store, online, and app reward programs to their customers. And this allows a company to be very flexible, issuing both single-use and multi-use cards, customizing them for a particular customer group, adding personal branding, allowing in-store transactions or services via ATM or POS, and finally, allowing certain types of transactions. So how FinTech providing such API are changing the market?
So we touch upon APIs, and APIs are, again, just key for understanding the new open banking, but also open finance and open data environment. Because everything comes with APIs, especially with open APIs, because they are published and they are made available, accessible for other players to be used. And what is the role of APIs? Let me explain first. So of course, this is the way to access data. This is how you can extract data given the specification, so like the certain scope and format of the data. But this is how you can extract the data. The data can be used for different purposes and for different use cases, for example, for credit scoring or for any other type of analysis. But also APIs can be a source for new products and services. This is how you can just deliver innovation, how you can create innovation and come up with new services. And they can also be a sales channel, sales and distribution channel. These are like three main roles or functions of open APIs or APIs in general. So with open banking, open APIs, as the name indicates, they are published and they are free of charge, and banks they are obliged to publish the APIs in order to extract the data. But we have different types of APIs because this is the channel, this is the route, the way how different parties can exchange data in a very seamless, instant way. That's why we also have issuing APIs, for example. You can imagine different types of APIs like identity APIs, payments APIs, of course, data APIs. And this is very easy. So first of all, this is ease of use. This is simplest. This is how you can create new services. And in this case, how you can easily and quickly issue cards, not only, for example, digital-only cards. And new players like fintechs, new banks are using that because it's a quick and easy way. So you mentioned like ease of use, convenience. But also, this is something that can be customized. So there are value-added services related to card issuing, like loyalty schemes, but also a lot of other services. And of course, it can be based on the APIs available and the scope of them that can be easily applied. So the card can be customized or even personalized with a different range of services. And we see a lot of different players in Europe, fintechs, but also in the Middle East when I worked, and in other geographies that are using the card issuing APIs because it's quick, it's convenient, it's ease of use, and you can really shape this kind of services in a customized way.
Anna, and closing this section, do you think account-to-account technology can gradually replace traditional financial techniques such as payment cards?
Oh, that's a very future-oriented question. And of course, I can bet on some of these developments, but we don't know. Since we really face such an exponential growth, but also uncertainty, not only in the payments market, but also generally speaking about fintech and financial services. And everybody remember how we bet on blockchain. Of course, blockchain, this is the underlying technology for cryptocurrencies, for digital currencies, but also for entire DeFi and many decentralized finance and many different use cases in trade finance and so on. But basically then generative AI emerged in the market. It's been like half a year ago, and now everybody's really not only betting on this technology, but is adopting this technology on the business level, how it can really help and enable businesses. But also it's a very friendly consumer interface, and consumer can use it in a very seamless and easy way. So now we see more and more developments into data. And I would say just payments, they won't be standalone, and they are not standalone anymore. So I would rather see more developments into payments related data and how it can be used. So I can't predict all the technologies that will arise or emerge, as we see the example of blockchain that has been in the market for a certain period of time, and then generative AI, which really took over, and just we observed the mass uptake in a way. But for sure, it will be more digital. For sure, it will be more connected. And of course, when all these developments of Web 3.0 are considered, we talk about more decentralized words. So of course, we should also take this into account. Cards or card-related payment, so definitely they will be more, they are already digital, and they will be more digital. I can imagine easily not having a physical card, only having a wallet. They will be also not only linked to data, but if we talk about data, they will be linked to digital identity. And I think this is a powerful trend, how we can really use payments to expand on our digital identity, and how we can really authenticate ourselves as users and consumers in a more connected world. So in Web 3.0. And not only Web 3.0, because I still also remember the times when we wanted to have like a payment ID connected to digital ID, so your identity, and how we can really integrate it into one. So instead of having different apps, you can have one app and one ID that enable you not only to interact with the government, not only to interact with health, for example, just with health services, but also to interact with banking and financial services. This will be like one ID to rule them also, to rule all the services. So I would rather look at this kind of developments related to data, related to digital identity, because it will be digital, it will be connected, it will be decentralized in a way. And of course, the question remains about the interface, and customer experience. And I think this is something that really excites me the most, and also something that ignites my imagination and probably the imagination of our audience. What will be the interface of the future? Because now we talk about, for example, just touch ID, we talk about face recognition, so we talk about biometrics, but it can be a hybrid interface, it can be something related to haptic, but maybe something related to conversational interface, so voice is also a powerful technology to be used. We don't know the interface of the future, so for example, we don't know exactly the interface for Web 3.0 in augmented reality, in virtual reality, in metaverse as well. Maybe it will be something like brain-machine interface. We already had some of the atoms. So it's a question mark, and I think it's an exciting stage of development. And of course, it's an exciting way to think about the future, but it will be more and more digital. If it will be virtual, some people say it will be virtual only. No, I can't believe it. We will still have our physical lives, but maybe with more digital technologies, enabling us for doing different things and definitely augmenting and enhancing our capabilities, not replacing us or replacing our capabilities.
Anna, thank you for sharing your invaluable insights and taking the time to join us for this interview.
Thank you very much, Denis. Thank you for having me. It was a pleasure.